Good morning, lovely people. Welcome to the Eurotrade. It is Monday. Let's see what the markets have in store for us. But before we begin, my name is Market Stalker D. If you've just randomly stumbled across this live stream, I specialize in some of the more unusual products that you don't see all that much represented anywhere. So I like to trade precious metals and the energies markets first and foremost. So we're going to have a look at a couple of those. But yeah, it's Monday. Let's not rush it. It's August, arguably the quietest month of the year for a lot of the products. I can see some things are still moving, but we have to be pretty selective. We had NFP and FOMC last week, so that's all out of the way. We can trade freely this week. So out of everything that I'm currently looking at, I can see equities have a little bit of movement. Crude oil is moving a bit. Gold is not. Neither is platinum. It's been kind of consolidating for the last 2-3 hours. Copper is also a little bit quiet. Okay, so maybe we can see what's going on with crude oil. Don't want to trade crude oil too often because I'm still kind of thinking what's going on with that market. Every so often I pop in a couple of trades there. So I did an options trade last week just for a couple of days. Let's have a look at it from a very big time frame. Right. So get rid of that. On the weekly chart, this market is still fairly range bound with a slight downward skew, but generally pretty range bound. So the trade that I did or trades that I did last week all banked on the idea that we're gonna hit this little, actually let's do all of our drawings again. So to start from the fresh chart. Okay, I'm gonna leave this massive supply that I drew quite a while back, but everything else has to go. Right, so touch of a long time frame supply. This particular supply has been in force since about, let's say August 2 years ago. And it's still giving, right? Anytime we pop into it, the price reacts from that area. Why does that matter if we're trading intraday? Because it's context. Because when you get anywhere into these supplies, even on a weekly chart, that is something you need to pay attention to. So my idea was that this big massive jump off a cliff that was also from the same area. So a touch of the supply and then a reaction created a new supply. And last week, we touched it. So I figured, let me try some shorts. And lo and behold, they worked. So yeah, definitely still a range-bound market. Now, what do we have? We have a selling wick. So a little bit undecided at the moment. But really, if it's going to continue to range, I don't see a reason why this couldn't get down to 60 at some point. How it's going to do that is another thing altogether, because it might just have very quiet days where it just kind of drops and then does nothing, and then we get to the next day, then it drops or goes up, then it does nothing. So crude oil has been a little bit fickle with consistency when it comes to everyday expected movement. One day is 300, most of the other days it's about 110 ticks, 130 ticks, then it falls down to 80 and just stays completely range bound. So it is a funny market, not too much momentum intraday, but from a swing point of view, it's actually still a decent trade. If you're going to trade, let's say, for 2 to 3 days, you know, that is actually still pretty decent, you know, as long as you can catch those little drops and pops that crude oil likes to do. So I'm going to speculate that we probably still have the same thing for this week. right now it is definitely trying to continue and extend the moves downwards. We have a little demand area right around 66.15, but since I don't like weird numbers, especially not on crude oil, I have a look at where the nearest round number is, and then I try to match that with any sort of options activity. And also, you can have a look at whether we're in a positive or negative gamma environment, and then try to figure out what's going on there. When I look at the options today, we do have a level at 66.50. And then, yeah, some other levels like at 66.25 and 66. So this whole area is telling me that there is some demand there, and I don't want to trade too much on the opposite side. So shorting into demand areas is is a little bit tricky, because obviously you can get that big bounce out of nowhere. Salesman wants to know, how was July as a trading month for you? Pretty patchy. So here is what I've been tracking here. So very patchy. Oops, let's go back. Overall, okay, just kind of, and I duplicate a lot of these trades on my live account as well, so, but we don't have analytics there. So very patchy, one day up, couple of days up, then one losing day. So one day up, then a losing day. So a couple of losing days. So that's been the theme of July for me. If I wasn't doing these streams, I actually used to take the second part of July and the entirety of August completely off any kind of trading. Like, I might pop in a couple of options and stuff, but I wouldn't trade outright because it traditionally tends to be a bit quiet. So you can sit there, watch paint dry, or you can go live your life and spend some time recharging. But here we are. So we have had some unusual years, let's say last couple of years, where July and August were not quiet at all. They were quite lively. One redeeming thing that we might get is like this tariff potential deal with EU, tariff deal maybe with China, but they kind of kicked the bucket down to another few days down the line. So yeah, we'll see what happens, but I'm not expecting miracles in July, which is why I need to be a little bit maybe on the defensive side in July. If you've also not felt that July was very easy, like there's a way to kind of be a bit more careful with your trading during the quieter months. And by the way, same goes for right after Christmas and then for most of January. So that's another seasonal time of the year when the markets are a little bit quiet. A lot of people are away. There's definitely the big reason for it. It's not some huge mystical, why are the markets quiet and stuff. No, it's just seasonality and people going away on vacations and holidays and visiting their families. So the big boys with deep pockets are typically not around, and that leads to lower liquidity because the market makers still have to make the market for the rest of us. And then if they're away, it's like tumbleweed, right? Sasman says, I noticed you didn't trade for a lot of the days. Was that a confidence or was it planned? Did I not trade a lot of the days? Let's have a look. Well, 4th of July, I typically don't like trading anyways. This one, I just couldn't see any good setups. And yeah, if I don't see anything obvious or nothing is moving, I will walk away. Like, I'm not gonna sit there for hours on end going, please move, please, 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 please move. So, I look for very particular setups. And if I don't feel that there's enough movement or momentum, and if we get to, let's say we do this session and then I can't really find a star setup, I can't see the levels that are distributed and located in a way that I can find one of my playbooks, or that the market has just completely run away from me, I'm not going to sit there chasing it, right? I'm just going to be like, okay, fine. Let's have a look at what tomorrow brings. Or let's say I want to trade NYMEX or COMEX, and I sit down, and for the first 3 hours of COMEX or NYMEX, they're stuck in like a 50 tick range. That's the cue for me just to go do something else, okay? I highly suggest that you develop something similar so that you don't trade on the days when your products might be quiet. And a lot of you get chopped up on range-bound days, probably because you don't, either the markets are lacking momentum or you simply don't have strategies for the range-bound days. Now, I do have strategies for the range-bound days, but I require that range to be of a particular size. If the range is too tight, like for example, copper, for a lot of the days apart from that one day when somebody did a fat finger 4,000 lot, I ran some statistics on it because I have my statistics algorithms that I use quite frequently, and I was like, tell me how many ticks was the biggest follow through on copper for the previous period. And I was doing it in kind of like chunks of 2 weeks and 3 weeks and 4 weeks, and literally as we kind of hit the second week of July, and it was already kind of drying up, but then the statistics came back with the biggest follow through after my signals that I use as an entry signal. It was like 8 points, and that's like 16 ticks. So it's like, yeah, I'm not trading that. It's ridiculous. So I require the follow throughs for my markets to have at the very least 35 to 50 ticks, but really even that is pretty quiet. Ideally, I want them to have 70 to 100 ticks. And if that's not the case, I will not trade. Very simple. VG is asking me, why am I unable to buy new trading combine on the new dashboard? I have no idea. I'm not IT. I think they're moving people to the new dashboard. I think that there's always growing pains when people are moving to new stuff. So just stay patient. You know, it is the summertime, so don't freak out. The markets will be here. So just, you know, relax. Right. Let's see. Did I miss any questions? No. Okay, we're good. Yeah. So let's watch. Let's place some levels on crude oil. Not that I like trading crude oil too much during this time of the day, but that's the only thing that's moving. Right, let's do some levels. So where are we opening? Obviously, we're going to open below value. Why? Well, because it was a big move down, right? Or big-ish move down. So, London value, too far away. COMEX value might be a little bit more interesting because it's close by. It's like 67.07. So let's just focus on NYMEX because I know many of you will be trying to trade NYMEX later as well. And I spent time writing my plans, but obviously since I like to draw these orientation lines for you in the morning, let's spend some time doing that. So this is NYMEX value area low. Then we have 68.09 as NYMEX value high. Right now we're still below that, but like I said, we have some problematic levels today in around 66.50. Quantitative extremes. Okay, to the downside, since that's where it's heading right now, we went over the London average session range low quantitative extreme. The next one is the ADR low. It's 66.02, which is basically 66. So I'm just going to pop that there. If it gets there and just carries on, you're probably in an outlier day. And in that case, unless it's like Euro close, maybe you could use euro close to just not do anything with it, and if it pulls back, you can look for a failure of the pullback and then a continuation. But if we get there and just as if by magic we happen to be sitting right around 66 or even 66.50 where we're at now, that could be a decent area for reversal. So context and time of day definitely matters a lot. What is this? This is 8-year low. And then to the upside, what do we have? We have 68.27. Greg, I didn't give up on RBOB, but RBOB I only trade towards the later part of NYMEX. So what is the point in me looking at it? You know, if I'm like, yes, I'm going to do all this analysis and then I'm going to have to redo it again when we get to the times of the day when I actually trade that. Generally, energies markets are not really something to trade this early in the morning. But for some reason, crude oil is... Obviously, it went nuts about that Russian news. And now all I'm looking for was a way to fade that, right? 68.25 is the upside quantitative extreme, so that is ADR high. So from the way this looks, a couple of hypos are already popping out depending on where we are. So like I said, one is a continuation of that unwinding that we've seen. Second option would be potentially some version of a value acceptance and then a full rotation. Third version would also be a pullback to value low, and then a failure in and around there. And then, of course, the final one would be reversal in and around ADR low at the right time of day, which is not going to be right now. Although we could have some wiggling because we're sitting at GEX2. GEX2 in the options levels tends to be an area where market makers do sometimes or quite frequently come in to adjust their inventory in order to maintain their delta neutral stance. So let's mark that as well. And like I said, we have a few other levels down below. We have a big boy put support from the 0 DTEs at 67.25. So maybe a little scalp if we can get the price action and order flow justifying that would be maybe long from GEX2 all the way up to that put support. $67.25. But one thing that I'm not liking here is the fact that all of these levels are pretty close together. So that generally doesn't always lead to very smooth movement. So that's former put support from 0 DTEs. So that's what we had yesterday. That's open interest. All of these levels, they're open interest from the options market. So yeah, if it kind of bleeds through all of these, I'm actually going to give up on trading it, because when I don't have any orientation points anymore, VWAP is far away, you know, value area is far away, all of the options levels from the end of day trading are nowhere to be seen. That's my sign to stay out, because I typically don't do well if I don't have any orientation for myself, right? Why? Because you're just chasing and you're just like, you know, trying to catch a move with nothing on the cards. So that's not a very good way to be. Causes a lot of stress for many people. So yeah. Did my camera go a little bit weird there? What's happening? Okay. Kind of refocused weird, didn't it? Can you tell us if you have any pre and post session rituals and practices? Not anymore. I used to, But remember, I've been at this for 18 years. So at this point, trading is just like another thing that I do in a day. To me, it's not like, oh my God, I had a bad day. I'm just like, okay, next. I don't really connect, how would I put this? Connect my self-worth on a trade by trade or even day by day basis, if that makes sense. So I look at my over performance week by week, month by month, 6 months by 6 months. And then I also have, a few different accounts. I have an options account, I have corporate accounts, I have my own YOLO personal brokerage account, I have prop accounts. So, it's a little different after 18 years. The only ritual I still have is to drink my coffee and caffeine in the morning. That's the biggest ritual. And then afterwards, it's not really connected to trading. When I finish my day, I typically like to have a bath just to kind of wind down from the day's activities. But I would do that even if I wasn't trading. I'd do it even at the weekends. Dog walking, that's something that could be considered a ritual, but it's just a necessity because I have 8 dogs and they all need to be walked. And we love spending time with them. They do go to doggy daycare on Fridays, so we're off the hook for Fridays. But then for the other days of the week, we take them to a field nearby and we throw a ball for them. Then they chase each other and stuff, and you get a little bit of unwinding, fresh air and all that. But is it a ritual? I don't know. But like I said, I used to have rituals. So one major one for me, when I was still learning, so back in sort of 2012, 2013, I would be imagining how I'm behaving in a losing position. Because imagining that you're making a lot of cash, to me, that doesn't serve any purpose. And here's why. Because if your plan works out, so you have a plan, you see the price action, you go in, and it works out. End of story, right? Like, it feels good, but it's end of story. There's nothing to learn from it. All problems that people have is at times when the plan doesn't work out. So my visualizations back then were just to make sure that I don't lose the plot completely when things are not going right. So I actually had a rule that if I had lost an intraday trade, that I cannot kick off another trade for the next 2 hours. And there's a reason for the 2 hour thing, because I work by the day trading time zones. I don't work by, let's just sit and see what happens. For every part of the day, I have statistical probabilities for the types of setups that are the most likely to happen. Why? Because I've seen them happen over and over. Now, back then, I was still collating and aggregating data, so I didn't have that much confidence. So sometimes if I would lose a trade and I would still think that I'm correct, I would re-enter immediately. So again, very long time ago, 12, 13 years ago. So I set out a rule for myself. If you lose a trade, no trading for the next 2 hours. But also the prop industry was very different back then. You had very tight risk limits. You literally only had like 1 or 2 swings at the bat on the day because of how tight the initial loss limits were. They wouldn't just allow you to, risk the entirety of the account. They were just like, okay, well, you can find 1 or 2 trades per day and then see how you do like that. And then you start to think, okay, well, if I only have 2 shots on the day, I better make it good, right? So let's see what time of day works best for me. And then from those stats, I always had stats, even before all these fancy trading platforms started having analytics and stuff. I used to track everything in an Excel spreadsheet. Excel spreadsheet queen over here. So I would look at the time of day when I had most success. And then I also tracked the type of a trade that was. Was it a continuation? Was it a reversal? Lo and behold, for a lot of my time zones, it was always a reversal. So I'm like, okay, well, I'm seeing this big move down. The amount of times that I tried jumping in and then it smacked me right across my face, I was like, Ouch. Okay. Maybe let's have a look at the reversals instead. And then I noticed, and I found out that there's certain events, there's, forex option expiries that have an effect on crude oil and on gold, which were my two main products back then. And lo and behold, I started finding fairly regular failed auctions in and around that time. So that became my prime time of day, after 9 a.m. Central and all the way into the Euro close. That's like the time of day when, even to this day, I have the highest accuracy, highest P&L, highest everything, because, the volume is good at the time of day. You have the Canadian dollar connection with crude oil, and then some of the others, copper also can turn around if it's in a less crazy state. So rather than looking for a trending move, if we're in a more range bound conditions on copper, you can look for a reversal then as well. And then all the way into Euro close and LME close. Now, depending on what you trade, obviously those times will slightly shift. But yeah, then, that time of day remains my most profitable time of day. So take that as you will. Sasmith says, well, I've been doing this since only 1 year and 4 months. Oh, well, you're a baby, man. Can you suggest me some? I want to do this as my main source of income, so I put a lot of weightage on it. I love weightage. I would say don't think of this as it being your only source of income. It's nice, it's windfalls, but there is no need to put pressure on yourself to only do trading. I think we have a slightly unrealistic expectation these days. And look at, actually, we had Anthony Crudelli posting something. Have a look at his Twitter, because or X, Twix, whatever we will call it these days. I'll still call it Twitter. He was saying how he went through a rough patch and had to sell his car, and had to do a whole bunch of other things because he tried to make, trading his only thing, and then it didn't. He hit a rough patch. We all hit rough patches. It's perfectly normal, but you need to make sure that your bills are covered. And if you're shooting for some unrealistic return, oh yeah, I'm starting on a prop account, and then next year or in 3 months time I'm gonna get 100 accounts, and then I'm gonna copy trade them, and it's gonna go really well, and I'm suddenly gonna go be making 100 grand in 1 day. Might be time to adjust your expectations, because whilst you can see some people doing that, almost exclusively they've already been in this game for 5 to 8 years, if not a lot longer. And they just found the sim farming to work for them because they can do their base hits and then amplify them. But if you're still struggling, and if you're going through the boom and bust cycle of getting accounts, not keeping them, not getting any payouts, then going back into the evaluation stages, the single income from trading is so far away. And also don't forget that all these people that you're watching on the internet, everybody has either affiliate income or endorsement income, or they have ad revenue from YouTube. That's also a thing. Or they have memberships on YouTube as well. They create videos just for their members, and people pay for that. So whilst it's trading related, it's something that can pay your bills. I always did contracting on the side as well. So I was an IT recruiter at one point as well. I was a musician in the very beginnings of my prop career. I still did gigs. So I don't know why people put so much pressure. They have this utopian dream that you can make all of your money super quickly just from one thing. It's much easier to do it from multiple sources of income. Trust me, okay? And your soul will be so much better off. Don't put unnecessary stress on you. Windfalls from trading are great, but whenever I get windfalls from trading, I spend it to, buy trinkets or buy, for example, I bought this camera, this whole new computer, because my computer, when I moved house, did not make it. I don't know what happened, but because I was obviously with my husband in my car, but we had a truck that was moving all of our stuff, and the whole desk had a dent in it, and I'm guessing something fell on the computer and it didn't it didn't survive. So the payouts that I took in April and May, all of that went towards equipment, and it was nice because it didn't actually dip into any of my savings or anything like that. I was just like, yeah, cool, we're just buying computer stuff. And, so just a little bit of life advice. Make it easier for yourself, and, make measurable goals. Don't make immeasurable goals where you're like, can't track your progress properly. Okay? Set goals like, this week, set a challenge for yourself. This week I'm going to only trade 3 trades per day. And then at the end of the week, you're like, how did I do? And then go, oops, okay, so Thursday I broke that rule. That needs to change. All right, let's do another week of 3 trades per day. And then also maybe mess around with risk reward. It's like, well, I only use 1-to-1 because I want high accuracy. Well, that's great, but do you want high accuracy or do you want to make money? Because frankly, high accuracy for most people, not everyone, but most people, it's not stable enough over long periods when you introduce chaos, when you introduce entropy into your trading. And it's a problem, right? Because people think, oh, I hate being wrong. Well, who the hell likes being wrong? But that's not the point. There were the turtles, right? Famous turtles who had famously 30% accuracy or even less, but they were wildly profitable. They all went on to own hedge funds. Why don't you hear somebody who isn't into HFT, so automated type trading, who has gone on to make hedge funds? Why don't you hear much about them? Because their systems are like this. They do well for 1 week, maybe even 1 month, and then they bust out. And then again, they do well for 1 month, and then they bust out. So there's always like a cycle where then one day will come and get them. And that's looking at across, like, let's say, a year to 3 year periods, which is typically what you need as a track record to do anything serious in sort of like funds and any sort of investment side of things for the public. You need 1 to 3 years of track record. And if you don't have that, or your system does not make it past like 1 to 3 months or even 6 months, nobody's going to invest in anything. Okay. And to me, that would be like because people ask me, why don't you like become a CTA? I don't want that. I trade for me. I don't trade for others. And I just don't want the stress, frankly, of dealing with investors and having to write sheets and everything. I did enough of the spreadsheet stuff. I'm kind of almost heading towards retirement, right? Where I just want to do my trading, clickety click here and there, and just enjoy life. I am 45 this year, in a few months, a few short months, and as I move into my 50s and 60s, I kind of want to be less stressed, not more. So, take that as you will. Sasmith says, I absolutely hate the idea of jobs, so I left it. You're right, though. Fortunately, I have good savings. Trading-wise, I'm positive, and I'm right on the edge of consistency. That's great to hear, yeah. And you keep process-oriented goals, not P&L goals. Excellent. So you're doing everything right, but just maybe consider that there could be some other income aside from just trading that could be trading related, okay? It doesn't have to be like, oh, yeah, I'm going to go trim people's hedges for a living. Doesn't have to be like that. It could be like, maybe just finding ways to monetize parts of what you're doing. Like if you're a software developer, for example, we have a software development firm. So one side of our business involves indicators and mechanical trading systems. So, it's not an easy thing to get into, I can tell you now. But, yeah. As Sanbei says, wow, I thought you were in your 20s. Yeah, everybody thinks that, but no. I'm seeing some blurriness here. What's going on? Is that me? Yeah, that's YouTube. Okay, fair enough. Yeah, everybody thinks I'm a kid. And it's actually, it's great, right? It's great, but gets a little annoying. I'll be honest, because people gotta tell you things as if you're in your 20s. Like, for example, I opted out of having human children, only have the dogs for various reasons that I'm not going to go into. And then people are like, oh, you're still young, you'll change your mind. And I was like, yes, when I'm 50, yeah. And they're like, what? And then I'm like, I'm 45. And then they kind of changed. They said, oh, but why couldn't you have? I was like, none of your damn business, but never mind. So yeah, it's a weird one, right? It is definitely a weird thing, looking a bit younger, and then people just assuming. All right, let's try one long here. 35 ticks. Just to test the waters over here. Test the waters. How's my American accent? So yeah, we seem to be reclaiming X2. This is why I'm in this long. Even though they smashed through the initial balance, sometimes I've noticed, or a lot of the times when crude oil starts moving, there's almost always like a, Anne-Marie calls them reflexive bounces, and let's see if X2 can actually bring us enough juice. I didn't open Bookmap for some reason, so I kind of feel like I'm trading a little bit blind here, but I'm gonna do time and sales here because it's a similar type of information. No, not another dome. Wake up, D. Okay. Okay. Do you know South Park, like with Mr. McKay? Because he always says McKay. So let's see. See if they can pump it. Looking forward to the time when Topstep has Delta, because that would help. Okay, some more buying, come on. So not a big target, you know, I'm just looking for that next kind of Gex level. Sellers. Let's see if they're responsive or not, or are they just getting run over? So far, not too much reaction. We have a new reversal here, so going over the previous candle's high, which could mean some structure change as well. But now that really needs to be sustained, so we'll see whether there's some wiggling. Like I said, half blind here because I didn't put Bookmap on. I woke up a bit later than normal. Usually I have like an hour and a half, but I couldn't get to sleep for like a really long time, and then I think I only slept for like 4 or 5 hours. So yeah, right, bit of a takeout here. But now Gex2 becomes my orientation, not wherever I went in, but Gex2. What are we doing? Are we going to sustain above it or not? And then I start looking at this little ribbon. For the summertime, I did increase the ribbon to 16 EMAs rather than 9. And then just to see whether we can get a little bit of movement there. But nearly always when they kind of take out the high of the previous area, if we've been going down, there are people who are going to try and hunt for that. So right now, 5-minute chart looks fairly decent. Would have liked to see this close of the 5-minute chart, excuse me, above this entire high that we had before as a potential range. But this could be creating a range. So let me just have a look at the 10-minute chart over on the other side. 10-minute chart actually has a pretty decent bullish engulfing right now. So bullish engulfing at Gex2. Statistically, a pretty decent chance that this might fade a little bit. We do have some single prints left behind, and if they can't take out the single prints, then there's going to be another reversal and then a continuation. But generally, it tends to happen in this hole. Single prints, fair value gaps, all the same same thing. Okay, I call them single prints because I'm a profile trader and I was taught to do that. So basically we want to see a push into this area. Obviously still GEX2 as the orientation point from the options chain. If they go below GEX2, that's going to be my invalidation. But I do have a stop loss that is not necessarily a disaster stop. It is in my whole risk model to use 35 to 40 ticks there. And then to just make sure you don't get whipped out by random wiggles whilst you wait for the slightly larger time frames to show their hand. So right now they're trying, you know, they're popping in there, popping in there. So we'll see how much juice they have. But the initial balance is actually all the way up here. So yeah, it left a pretty decent single print. So this would be more an auction fade. An auction fade, which is my concept. My concept. This concept. Yeah, so you can see here, they started an hour after the open. They started to move down, but I rarely, very rarely trade that early because my brain doesn't work and it's just not a good time for me to start trading. So yeah, I was a night owl up until about 10 years ago, and then I don't know, I got old, so now I just naturally wake up at 7 a.m. which is super odd to me because before you couldn't wake me up until midday, but now I'm like, oh, I'm awake. It's like, okay, let's go do some gardening. Yes, Mr. McKay, the teacher, that's the one. Yeah. Shay Hughes, morning. Good to see you here. Smith says, hello, you got me. I'm a software developer and am right now working on AI journaling tool. Hey, yes, awesome. Hit me up, maybe we can work together. Yeah, we don't really do journaling tools. We're more on the mechanical trading system side, but I think AI journaling tools are the future. Especially if you can somehow incorporate a way to make them also include like missed trade opportunities, like out of fear or confidence issues or whatever, and then somehow to prod them, I don't know, to prod them to go into trades. Can we maybe make like a biofeedback journaling tool where the journal notices a pattern and then it zaps you to tell you? Is that a utopian dream? I don't know. But that would be like the best thing. Something zaps you when you start. Like let's say you lose a trade and you're connected to like a wristband or something. Because I have the Galaxy Watch and I'm sure they could incorporate a little shocky thing in there. So, you know, you lose one trade and then you define that if you do another trade within the next 15 minutes, it will zap you. So you do another trade and it closes the trade and zaps you. And then spews out this big thing going, you broke your rules. Ultimate negative reinforcement tool. Dog training style. Not that I say there should be zapping dogs, but you know, some people do. Very unethical, by the way. But for traders, well, if you sign up for it, technically it's consent, right? Anyways, let's move on from this hilarious topic. By the way, all of that was just joking, right? But yeah, AI journaling tools, definitely the future, I think. All right, come on, buyers. See, nobody bigger is playing here. They're all like tiny. Not liking these 29 contracts around here. What's going on? That needs to disappear. Do we have anybody over 28 contracts? Because really I want to see somebody with like 100 contracts. We have one at 193. It's 66.20. All right, 66.20. Interesting. Yeah, so we may, if it fails in and around this area and goes below GEX2, then they will try and go back towards the 66.20 where I see some liquidity. But for now, it's all just, you know, some buyers are trying to step in. So we'll see. Like I said, I feel like I'm half blind because I didn't open Bookmap. As a Topstep trader and streamer, can you talk about Apex rules? Why would I talk about Apex rules? Well, which payout rules? I don't know, man. Like, I don't think anyone knows anything about that. But I would, I don't know, just follow the rules. I mean, with any, not talking any prop firm, just, you know, whatever rules they have, try to follow them to the best of your ability. And, you know, if you don't, you don't. It's like, then you can't really complain that X, Y, or Z have not paid you. You know, I mean, Topstep has a very simple payout procedure. Very simple. With some of the other firms, a lot less simple. I actually made a video that sort of jokes about certain parts of the prop industry, like, you know, if you want to pay out, gotta wait till Mercury is in retrograde and then hope for the best. But, you know, look, prop industry is growing and it's all new to everybody, so it's, you know, we're all kind of making it up as we go along in many ways, but Topstep has always kept it pretty simple. You know, one thing that differentiates Topstep, and the reason why I'm here, is they've been here the longest. They are the pioneers. They were the ones who came up with the idea. It was MP and Andre's idea. So second of all, their payout rules are the simplest. Trade for 5 days, make over 150 per day, get a payout. Couldn't get any simpler, right? The other rules have, you know, oh, consistency rule, oh, this, oh, that, and it gets complicated. And this is why I was kind of poking fun at some of them, because some of them are like, if you get the pro account, but then you're 5,000 profit on all of your other accounts, but then you exceeded your profit in the pro account, you will then be like, I don't even know, I even get confused, and I just lose the will to live halfway through that paragraph, and I just go, okay, no, next. So that's just how I am. You know, I come from the old school prop where you had none of that. You know, you were just trading. Initially you were given a daily loss limit in the very first company that I started. And then after that, the next one, once you get a little bit of like track record and stuff, they actually just gave us 20 grand for the month without a daily loss limit. They were just like, well, you decide. We don't care. You know, it's your assignment, your assigned capital, so you can do whatever you want with them. And I don't know, maybe at some point, if a prop firm is big enough, they would be able to do that, to just give you your capital, fund the account, and not have any of these other risk rules. I truly hope so, because that's kind of what I was used to back in the day. And it was great, because depending on how your P&L was, depending on how the day is going, and of course, depending on whether you lose control or not, they can trust you with that money. But if they can't trust you with that money, if you're going to lose, you know, 90% of the account on day one, obviously that's a problem for them. And the reason for all of these rules, unfortunately, is because we're working with a retail trader who is not very sophisticated, and I'm sorry to say, but most are not. And this is why we run the VIP program, to try and help you guys and girls out, just to show you how a professional thinks about the prop and thinks about risk rules. Are the risk rules great? No, but they are necessary to protect both the firm and, to a degree, the trader as well. Especially the more novice the trader, the more inconsistent they will be, right? Because they will have issues psychologically and they don't like to lose. So then not liking to lose, but at the same time happy to lose the entire maximum loss limit of the XFA that they've been building up for like a month. But you don't like to lose, apparently. Isn't that like a dichotomy in its own right? That you don't like to lose, but you're happy to lose your entire account in one day? doesn't make sense. It's like, make it make sense. So this is why the retail prop firms are very, very different than some of the old school prop, where, you know, you kind of had people coming in that already had a track record, knew what they were doing, and all of us. Yeah. Anyways, that's all I'm going to say. But yeah. Well, it's not that I can't, I don't know what to tell you, man, because from all of the things that I've seen, the rules change from trader to trader. So it's like, yeah, they have one set of rules on paper, but really, in reality, clearly people are reporting that that's very much case by case. And, you know, to a degree, I can understand that, because even our risk team, it's always case by case. It's like, well, who are we going to give the bigger data loss limit to? Does this person deserve it? Or, you know, what about this person? Well, actually, let's lower the risk limit, because they did, and now they've automated that. That kind of scales up and down with your P&L, which I think is great. Less work for them, more automation, and more transparency for the rest of us, right? I'm keeping an eye on copper, yeah, but a lot of levels in and around this area. I don't like bunched up levels. I want levels where we have nothing. And right now we have, when I was starting the stream, we had GEX 4, GEX 5, GEX 2, GEX 1, like all in the same tight range. So for me, I want to wait for COMEX. Or at least LME, because LME tends to reverse everything. LME open is in another hour and 10 minutes, so I won't be here, but still. Are you streaming on Tuesday? I'm here Monday to Thursday. Are you asking me about my own stream? I think I actually got a little bit of a wobble with my illness, so it took me 3 weeks to kind of get over it. I tried to push through my own streams, didn't really work very well, and then I got sick again, so I had to scale it back. Might do a stream on Thursday, because I think Thursdays, or I don't know, maybe I should do one on Wednesday. I need to do one when I'm not doing the main broadcast, like Lunchbox Trading with Anne-Marie, because I think that doing 3 live streams a day nearly killed me. And that's to do with my health condition, so I do apologize, but, you know, I really tried. I was like, I'm going to do my own live streams again. And then tried it for 2 weeks, fell into bed, and I was like, great. So, yeah, maybe a Wednesday or Friday. I don't know. I have to work out my energy levels to be able to figure out which day of the week I might be able to do a stream. We're talking about my own YouTube channel, because it's been on a little bit of a back burner because of the MECFS condition that I now gloriously have. But yeah, might explore Wednesdays, because Tuesdays and Thursdays, because I'm on the main broadcast, that might not work for me. Because I have to stick to like 2 streams per day, otherwise I won't be here. I'll be like, yeah. It's a challenge. It is definitely a challenge, because my energy levels are so inconsistent. It's really annoying. John Nasuti says those 1-day pass evals will make you blow up easily. Well, not necessarily. If just because you can, and again at Topstep you can pass in 2 days, just because you can doesn't mean you should. So false economy there. Oh, it's cheap. Let me pass it in 1 day. Oh, I blew up. Let me buy another set of accounts. Why not look at it? Okay, it's cheap. Why don't I try and treat this as if it's the old days where we needed 7 days minimum to pass? And then I got a cheap account, spent a week on it, and you get your account. Like, again, just because you can doesn't mean you should. And if more people had that philosophy, they would be much better off. Okay. How would you approach being very risk averse? I dread risk, never blown an eval, but I find it hard to pass. I see that as part of the same coin. So you are so risk averse that you've never blown an evaluation, but you also never passed a combine. Why? Because you hate risk and you can't stand to risk more when the time calls for it. So I would actually tell you to build up a very robust scaling plan through your combines and to not deviate from it. So for example, let's take a 50K. Let's say you start with 1 micro, being extremely risk averse, right? Once you get past 1,000 mark, you need to scale up to 2 micros. Okay? If you go back down over 2K, like let's say you got up to 2K, but now you're 1,800 because you might have had a bad day, keep the 2 micros until the account is back below 1,000. But if it goes over 2K and towards that target, at 2.5K profits, increase to 3. Okay? And don't deviate from that. Because you have to somehow size up. If you never size up, you will never reach a target, especially if you're doing 150Ks. Like there's 0 chances of reaching 9 grand, not trading minis at some point in the combine. You can start slow, but 150K has an aggressive target of 9K. Let's be honest, you won't get there with 1 micro, okay? Unless we have another tariff madness, but generally you won't get there. So yeah, have points where you will be scaling up, and don't allow yourself to go, well, I'm over 1K now, but I will still stay on 1 mini. No, the rules say you have to go up. So you have to make rules for yourself that you're basically the opposite of nearly every single trader that I worked with, where you need to push yourself into size. Most of the time, us coaches, we spend talking people off a cliff because they're in with like, I want a full port 15 contracts. And you're like, no, don't do it. But yeah. So yeah, make yourself go into trades. If your problem is not trading, like if you trade like, well, let me ask you a question actually. How long do you, how many trades do you trade per week? I'm going to guess it's going to be a low number. And do you trade every day or not? By the way, guys, Paul H is going to be here with us. You see him in chat. He's going to be here on Thursday with us chatting. So looking forward to that. So let me know how many trades you do per day or per week. Yeah. So per week is no more than 10. Yeah. And is that because there's no setups, or you just feel uncomfortable to trade more than that? Yeah. Yeah, the newbies definitely do very, yeah. To be honest, that's the worst thing for me when I see, 3 per week, no more than 10. Yeah, yeah. I mean, that in theory is a good amount of trades. But, you know, there are days, like, for example, if we're range bound, or if we are those guys still down below? Yeah, okay. So if you are trading 2 per day, let's say, because there's just no setups that you can see, and the setups are just like, okay, I had that setup and I had that setup. I'm done. I don't see any more setups. But do you sometimes trade twice and then a setup appears and you still don't take it because you're over the number of trades? Because I would say for anybody else, it would be like, do not trade again because you have a different problem. but you're risk averse. So you actually need to force yourself into more trades if possible, especially if the market calls for it. So if it's a range bound day, you did your 2 trades, and yet the market is still presenting you with that up and down movement, rotational movement, where you can actually make more cash by taking slightly less profit rather than chasing 2 and 3 Rs. You chase 0.8, 1 R down to or up to the middle of the range. Oh, you're uncomfortable on the charts for more than 1 hour. Interesting. Just make dumb decisions. That could be a focus thing. I don't know whether that's maybe a risk averseness thing. And do you have well-defined playbooks? Like for example, right now, I'm looking at this crude oil. I know it's a potential for an auction fade, okay? That's what I'm aiming for from the ballpark GEX2 level, right? I'm fully aware that we have some liquidity down at 66.20 that is past my stop loss. But I still know that in and around this time of the day, leading up to NYMEX and the overlap, first and foremost the overlap, then more likely than not, crude oil tends to reverse and at least go into a little bit of a pullback. So that's why I'm not aiming for 70 ticks. I'm only aiming for 40 ticks here. Maybe even less. If I get 35, I'll be happy. Do you have well-defined playbooks? Because if you don't, that probably leads to the discomfort being in front of the charts. Trader Ken says not more than 10. Very impressive. Very impressive for the grasshoppers. Okay, for the grasshoppers, somebody says no more than 10 per week, and they're like, wow, you are the monk. And yet, for Zygus P, that's normal for them, right? They're just like, I feel uncomfortable. That's all I trade. So to them, that's a natural thing. But for the grasshoppers, for those of you who love clicking buttons, you're like, click, 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 and before you knew it, it's like 10 minutes into the session, you've already done the 10 trades, never mind a week. So you see somebody who's not doing that, and you're like, oh, God. Yeah, respect. How can you stay in a trade for so long? It's like, because yeah. I trade order flow, but I get scared when I see something bad in the book. So let's define bad. So I see something bad in the book. Like, what's bad? Like, for example, is this bad? 193. Oh my God, I'm going to be scared of them. I just look at it as it's data, as information, right? To me, that's data. So bad in the book? What? Not much delta going on? But you know, it's all information. Like, if we had some delta, let's say it got positive, but then this move fails and they shave it down to half the amount, that's information, right? That's not scary. That doesn't mean that the buyers have failed. It means that it could be a continuation, whether it's bad or good. Like, I don't really attach personality to order flow events, so that's a new one for me. So maybe start looking at things more as data rather than your own emotional lens. Because by the sounds of it, just everything you're saying, I'm uncomfortable in front of the charts. I am risk averse. I get scared when I see something bad. It's all to do with your emotions. Like, it's nothing to do with the actual charts and order flow events. It's all a filter from something back in your childhood that you've lived through that made you extremely risk averse. And just knowing how my mom was, like, she comes from a very turbulent background where she didn't have a lot of stability. Perhaps it's something to do with not having stability early on in family, and you seeking out as a toddler to have that security. I don't know. I'm just like literally guessing here. I'm not, a psychiatrist or anything like that, but I just know that those kind of experiences and extreme risk averseness usually stems from some sort of instability that people live through very, very early on in their lifetime. So yeah. This is now settled into a range until it makes a lower low. It's not invalidated, but I am getting increasingly annoyed with this trade. Again, one of the reasons why I don't like trading crude oil for this time of day. I mean, GEX2 still could be reactive, But they've just kind of lost power and lost the will to live here. Tried to go through the single prints and failed, but also didn't make new lower low. So there's nothing for me to do. And then on the 30-minute chart, this is starting to look more and more like a range. Let's have a look at YM. Again, looking forward to the time when we get DAX, because this London trading instruments out of hours, it's really annoying. I'm a mean reversion trader, so obviously I will always look for reversion setups first and foremost. But right now we've just settled into nothingness, so never mind. I'm just gonna tighten this up a little bit and leave it alone. If I was in more than one contract, I would have clipped that in half, but I'm only in one, so I don't have the ability to do that, and therefore we have to let it go. So it is what it is. Anyways, like a big block trade or something, Zygasp says. But a big block trade is also information. It's information that there's liquidity up there and that it's a possible zone of interest, right? If it's a very thick order block, if you see it on Bookmap, it's going to be hard to break through that unless they kind of ram into it with quite a lot of size. But if the move in the run-up to the order block was already pretty extended, like we had a similar thing happening on the opposite side here. So, you know, the move down on crude oil is pretty extended. Yeah, sure, it can keep going. But the likelihood is that as soon as they lose power, there might be some order blocks. Like, for example, right now they're creating mini order blocks. They're not very big. And if they start creating 3 or 4 price order block, which by the way is very rare on crude oil, that is going to stop the progression of the price. So crude oil is not like NASDAQ where it just runs through everything, but it's information. It's not like a scary thing. It's information that we can use and take advantage of. So it's very interesting to hear you say that it's like a scary thing. Very interesting. I've never had anyone define order block event as scary. To me, it's all data. And maybe that's why I've stuck with trading for so long, because I'm risk averse. You know, I will never trade 5 or 10 lots if I only have like 5 or 10K in the account. But I am not that risk averse to not take the trade if it comes. If it's like staring me in the face, right? So I would work on getting outside of my comfort zone and maybe just seeing data for what it is. Not scary events, but just literally data. So yeah. I feel NQ is going to take off, says Ken. Well, it managed to... Hold on, what's going on with my options here? Managed to climb back over some puts that we had, but the problem is we have some areas of resistance. Let me just have a look. It's literally just hitting the previous area where it paused on Friday pre-market. I have a loose area of 23,120, so ballpark around 23,000 that it might get to. But after that, it will be a little bit tricky, because I think we're getting into some thicker areas of volume on NQ. You just have a look, because I had a look at it like very briefly because it's not one of my main products. Yeah, I mean, this whole area is very, very thick in volume. But yeah, let's scalp up to 120 as a value acceptance continuation. That could be always a choice. So yeah. Shay Hughes says, Dee, if you get a chance, can you cover a little bit about poor lows on the market profile? Well, poor lows are nothing more than just two little double tops or double bottoms. That's all it is. And the implication is that when you see that, at some point, either this session or the next, they will get broken through. But on commodities, quite frequently, if the poor low or poor high remain for the day, like let's say we finish the day, we get to the end of electronic trading, the next day you might get a scalp through that and then a stop run in reverse, sort of like a liquidity grab. So you can use it to back your decisions based on the fact that you had poor highs or poor lows that stayed yesterday. But intraday, if it's still very early on and you see poor low, a lot of the times the poor low is going to get taken out during that same session. So if you're already in on a short, but you see a poor low and then it wiggles away from it, just stay in on a trade. This is why situational awareness via market profile is so good, because it forces you to look at things outside of your control. So for example, if we go all the way, we actually have a poor low on poor high on NYMEX. Sorry, is it London? No, it is today. Yeah, it is today. Hold on. Let me just clean something up. Yeah, so I'm going to show you here just quickly. So here is the poor high, literally double top. So if my trade does work out, I technically could, I mean, I'm going to run out of time generally, but technically we could get all the way up there. And then the expectation is that at the very least, the price action is going to take out the poor high. So that's the only way to look at it, right? Bab has a very odd comment that I look so AI generated. What? What? People think everything is AI generated. I posted my dogs like the other day and somebody went, oh, they're AI. And I'm like, what? Not everything is AI. That's so Italian. I talk with my hands a lot. But yeah, poor lows, poor highs. Use the lows of the profile as targets. I would actually run through them as targets, frankly, because that is the expectation and the implication of the poor low or poor high, that they will get taken out. So why just focus on hunting for the poor high or poor low when you can take everybody else's stops that have placed them right above the poor high, and you're like, that's the poor high, I'm going to take that stop. Be the Bond villain, you know? Yeah, I know. Yeah, trader can, right? Everything is AI generated. Yeah. Is that broker platform from the 90s? Yes, it is AMP Futures MetaTrader 5 with CQG data, which, by the way, CQG is one of the most reliable data feeds in the industry. So whether it's from the 90s or not, and yes, CQG is from the 90s. If you have a problem with that, then we're not gonna get along very well. But if you want to see that same platform that looks a little bit different because of the color scheme, and remember I'm old, so I like the black, I like the white one, but that same platform can look like this. Yeah. So it's just the color scheme. I like the white because I find the black is very painful on my eyes. Sometimes I'm outside as well, sitting on my patio in my garden, and I just can't see squat when I'm looking at black backgrounds in the sunshine. So I prefer white, but it can look like this as well. But just literally same platform, just different color scheme. Same platform. Yeah? So this one doesn't look like it's from the 90s. And it has all of the cool features, like for example, backtests. Backtests right on the look, all the profile and even the volumes all in real time. Oh no, what's happening? Oh, from the 90s? Yeah. Well, platforms from the 90s can't do that. So enough on that. I bet you don't have that, do you? You have to kick off the playback mode. Woo! I don't have to kick off the playback mode. It's all just there for me. Just a bit of joking. Don't take it too seriously, guys. Okay? Yes, I do use an old platform because when we were creating our indicators, and I'm from the UK, everybody in Europe was using MetaTrader, so it was like the largest retail platform at that time. And we are creating our indicators for some other platforms as well now. So, yeah. Chat good roast. Yeah, the Pi. You know, people are getting paranoid of AI, and I'm getting paranoid of it as well because you just some of AI looks awesome. Like there's the Star Wars AI channel. What's it called? So I can't really show it here because it might be like copyrighted or something, but I'm just gonna tell you what it actually is. It's like the stormtrooper doing like a whole run through the Death Star and stuff, and it looks like insanely realistic. Like I would argue better than some Star Wars movies recently, but you know, what's it called? Come on, I've lost it now. Oh, here we go. So the channel is called Artificial Cheese. That's what they're called. And it's like literally so crazy realistic. That scares me, right? Definitely scares me. But people think everything is AI. Apparently I have AI dogs. Apparently I'm AI as well. I think Andre is AI. Everybody's AI. Is MP an AI? I don't know. Should ask him. Yeah, Sasman says, wow, that backtesting is hella cool. Damn. That's our feature. So we worked very hard to have, to not have to go into a separate playback mode and stuff. So it doesn't erase candles, but I wanted it just to quickly go back in time and to see exactly what happened on the day. I didn't want to mess around with strategy tester or a forex tester, which I still have nightmares about. And it's quite funny because they asked me to do a, oh, would you like to do a sponsored video? And I was like, hell no. I was like, the bane of my existence. Why? Because they still didn't have like custom tools that you could just plug into. So they were just like, oh yeah, you can do good. So I decided to say no to them. And I say no to a lot of things, to be fair. Because, you know, I also don't like, if I'm going to review a platform, I want to give my own opinion about it. You know, I don't want them telling me what to say. But maybe I'm different that way. I don't know. So, yeah. Rigoberto, are you green or red? I'm nothing. I'm in my very first trade right now. And I'm just waiting. So, neither. Yet. Suppose I'm red because I paid some commissions here. Minus 1.52. Slow down. Slow down. yeah, so with our backtesting tool, we wanted something that's not lagging, so super optimized, and that you can just click a couple buttons or click one button and just go exactly to the point where you were looking for. How all of my dynamically calculated levels and profile and quantitative extremes, how did they look? And that's what we created. It took us 3 years, but that was back in 2015 to 2018. So now it's just a matter of updating it, and whether we can replicate that on other platforms, I don't know. We probably could. Anything that is like C# based or derived from, it should be possible. So yeah. Sasmit, that one was I do think that MQL is based on C++, but it's their own bastardization of the code. So yeah. What is your company name? Yes, I'm allowed to say it here. They're called Blahtech Limited. BLAHTECH, like blah blah blah. So Blahtech Limited, one word, right? Blahtech. I'm fortunate that Topstep has always supported some of my other ventures as well. So not that I push it in everybody's faces either. It's like, it's kind of a well-known fact by now. I know that some of you are new here, but I have been on YouTube since 2015. Not that I spent, I was busy with other careers and stuff, but it wasn't really up until COVID that I started thinking about it a little bit more seriously. And I still maintain like a lot of humor and whimsical nature on my own channel. So yeah. Yellow and blue charts on the right side. What's that? That's called volume profile. On TopstepX, that is visible range volume profile. And it helps you to see sort of like, I suppose the simplest way that you could explain it is supply and demand, right? So you can see that up here we built some volume before we went into a liquidation. Now we're accumulating, and probabilistically about 70% of the time when you start accumulating, there is a very good potential you're going to have a markup. It's like basic market structures. And then you have this hole in the middle that represents low volume nodes, or single prints, or FVGs, or whatever the hell the cool kids are calling it now. But basically you can expect a couple of things. It's either going to hit it and then go straight through it with quite some speed, because we know that price moves quicker through the low volume areas. But on the flip side, you can also have a continuation. So they try to go into the single print, they fail, and then they just roll over and continue. So it's a matter of context. I think we have a pretty decent chance of turning around here, especially because we've now, like, I've been on the stream for what, nearly 90 minutes, and we've just gone absolutely nowhere, and that can spell accumulation, which is usually followed by markup. Time of day is a little bit wrong, because usually the markups, the distributions and accumulations typically have the highest chance of giving a reversal after 9 a.m. Central. London tends to be a little bit tricky with that, but we'll see. We'll see what happens. It's just a little test trade to test the waters. There is liquidity down at 66.20. Fully aware of that. Okay, fully aware of that. But at the same time, I think we have a pretty decent chance of a pullback. So we'll see. So, like, you guys make indicators for other platforms. So, like, yeah, dude. I would make them for TopstepX as well, but we don't yet have the objects creation. We just have, like, orders. And I'm not interested in making signal services. So, yeah, I'm kind of waiting for maybe Topstep to somehow come up with, like, some version of a third-party vendor. Which might be a problem because we know it's a white label skin. So there could be some copyright issues. I don't know. But I would love to have like TopstepX Marketplace where a whole bunch of us can start creating tools for it. It would be super, super awesome. Who went short in NQ? Took my eyes off. Time to kick it back in the right direction. Yeah, like I said, I would I don't think we're at any relevant levels on NQ. I think the relevant one is 23,000, and then higher up 23,150. I think this is just like up in the middle of nowhere, to be honest. Is today a B-shape day on crude oil? No. Today is, if anything, a triple distribution day for now, and trending day down. Sorry, double distribution day potential. No, triple. All right, so let me just, how can I show this? Let me see if I can just make this into a TPO only. Just trying to remember how we used to do the TPO only mode. I rarely use the TPO only mode because I don't personally like it. And there it is. So the B-shaped profile is when typically A and B period go almost straight down without much overlap. And then the market settles into the lower third of the profile. That's the, that is the definition of the B-shaped profile. Today we have one distribution curve, two distribution curve, three. So it's going to be an unusual day, right? Immediately an unusual day. And right now it looks like it's continuing down to the liquidity and 690, so I'm going to kill it early because we don't want to eat up the full 370 plus commissions. And then I'm just going to wait. So I'm just going to wait because we went down below GEX2. I have no setup now. No setup whatsoever. Therefore, now I have to wait until the next day trading time zone for me. That's after 9 a.m. Central, and see what we have when we get to that point. But yeah, looking forward to someday I'll learn how to get the bloody charts and time frames in the right order. Yeah, so looking forward to see what they do with it. I would still be a buyer in and around this area all the way down to 66. So I'm going to wait for that hypo to turn up. If we get up to 67, 67.25, I want to become a seller again. So I don't want to be a seller here because there's nothing here apart from short in the hole. So I'm willing to wait and to see what they do a little bit later on. But that does mean some patience and not just smashing things in on a Monday morning. But yeah, can't wait till DAX arrives because, like I said, a bit painful trading all these out of hours instruments, especially when copper has decided to stay quiet for the first 90 minutes and then just wags around with no levels to support it. So here's what I don't like about copper. So it's gonna make it a little bit more obvious. So just a quick glance of why. You see the proximity of all these GEX levels? Exceptionally hard to figure out which one is going to be the stopping point or whether we're just going to chop in a range. And that's why I stayed away from copper today, because I don't want to see that. I want to see price action already somewhere up here and then maybe touching GX2 and going up to GX1, or already being up at 1 day max, which is kind of similar to my quantitative extremes, ADR high, ADR low, and then nicely bleeding below GX1. That's clean and clear. Whatever copper is doing now, to me, just looks a little bit messy, looks like a random walk. So I want things not to be so bunched up with all the levels. I want clarity, and I don't want anything in the way if I'm going to trade it. And this one had a lot of things in the way. So it's like, yeah, it turned around and went lower, but it's like, I couldn't see that ahead of time. So the whole point is, if I don't see a playbook ahead of time, I'm not going to be very good at managing it, even if I catch some kind of a trade, right? It's all going to be haphazard. So I would rather lose a trade that I defined very well, like the auction fade, and know how it should look, so I can either kill it on time before it sort of totally breaks down, or I can manage it appropriately if it does go into the right direction. And if you can't see that, then you're trading out of fear and doubt, and that never ends well. So being a good loser is half the battle here, okay? Paul H., do you think the brokerage alignment will bring about DAX support? I mean, it's a lot of effort to become a brokerage. Seems DAX is a much easier thing to do. Honestly, I just thought we could just pay for it and have it. As it turned out, there's a problem between DAX trading in euros per tick and our dashboards being in USD. So I'm guessing until they can have a Forex feed for currency conversions that they can call upon, that's going to remain a problem. But I am hoping that once the brokerage is there, being on a live account, I can just hopefully just pay for whatever bloody, data feed I want and be able to trade it. I'm shocked that that's not the case already. So yeah, hopefully it's just a minor snag until we can get it. But yeah, your guess is as good as mine at this point. I do hope we get it, because the whole point of running these Euro trade shows was to get DAX, and then I got stuck trading bloody copper and trying to find something that moves. And in the meantime, let's see what DAX did, just for the end of the show. Right, but DAX right now is going into sustained auction, but trying to chill out around the average session range high. If it fails that, we didn't have a well-defined Asia high. We had a well-defined Asia low, which still might be a target. And that's also where the ADR low is. So maybe DAX, we can look for a failure of 650. So failure of 650, which would be somewhere ballpark here. And then a failed auction rotation. Watch VWAP, it's right in the middle. This is Globex VWAP. But if we tackle that with fair amount of confidence, then there's really not much reason why it wouldn't go all the way into the rotation. And that would be one sweet trade on DAX. So we'll keep in mind. Let's check gold for a second. Any difference with CME level 1 versus level 2? Well, yeah, CME level 1. I have level 1 just on... no, of course, this is... there's a combine, so I have it. Anyway, so level 1 would be just one price. Whereas level 2, you have all of the prices. But if you don't use order flow much, then you don't need it. If you do, obviously... Yeah. Omar Crude says DK chicken gold currently in short 3409.6. don't see anything on gold right now, I'll be honest. I think it's very quiet. And I think we're going to need at least the LME to start moving it a bit at 11:40 my time, which is not for another half an hour. So, yeah, it's very quiet. It's like literally just stuck. So I don't know whether this is a good time of day for gold now. Anyways, we have... we've come to the end, unfortunately, so I'm going to see you again tomorrow. And tomorrow we're also going to have lunchbox trading, I think. I'm going to pop into my VIP session at some point today to kind of do some introductions and stuff. We are still waiting for one piece of, just one piece of paper from the compliance and legal team before we can like start doing slides and stuff and actual teaching. And this time around we are slightly delaying the beginning of the combines in order to educate people before we start the VIP coaching, because we kind of made a bit of a mistake, I think, last time. We were just like, yeah, let's just get everybody in, and before we even had a chance to talk to anyone, we've already had people blowing out like on the first day, which is not what you want. So yeah, so I will try and do that, but I do need to wait until the top steppers are awake so that we can see where we are on that little document. And then hopefully I can do a little intro for my new VIP team. Until then, I wish you a good trading day. I'm Market Stalker D. This has been the Euro Trader on TopstepTV, and I will see you tomorrow. Take care.